Hi everyone, welcome back to the Business Analysis and Reporting Examination classes for US CPA. In this particular video, I'll be walking you through the overview of chapter 1, that is business analysis, and this chapter 1 will be around 40 to 50% of your examination. So this particular video is part 2 in continuation of the overview of business analysis and reporting examination. So if you have not watched the part 1, I request please go through the part 1 because this will be in continuation of the same. So let's dive into to understand more in detail. Prospective analysis including use of data. So are you guys using data analytics by any chance?
Yes.
Or you have seen like how the team are working, they are using data analytics? Can you give me thumbs up like who all have been used data analytics so that I can understand who all have seen? Yeah, Surya, I see 2 thumbs up. Yeah, Rachita, Saloni, you guys have not used data analytics? Sejal,
No,
Arishi,
partially only.
okay. But
Allows it
but
after staff things.
sorry, say that again.
I'm saying EY allows data analytics after you are staff 3 and above.
Okay, once you reach to third year staff. Okay, got it. But like in your engagement, like you can see like how other team members or seniors are using data analytics. So like please consider this as your homework, right? Before coming to the next class, I would request each one of you to go to your engagement, check with your seniors like how they are using data analytics. That will help you a lot in both FAR audit as well as in BAR exam. So data analytics is part of all the three examination now, right? Are you guys with me? No, sometime I have to check.
Yes.
Okay, so the next topic which we have is the prospective analysis, including use of data, that means data analytics. So in that, we'll be understanding budgeting, forecasting, and projections. So have you heard these terms before? Budgeting, forecasting, projections.
Yes.
Yes.
What is budgeting?
So it's like preparing a budget, how much amount of resources would be required for completing a certain task.
Mm-hmm. Yeah. Same way like you might be like go through your engagement budget. So that is being available in your Canvas file, right? So if you go to the engagement budget, you will see like how much time for the partner is being involved, senior manager, GDS team member, on-site team member, right? And what is their costing and everything. So that is the budget for your engagement. And then I'm sure monthly your senior manager might be doing a tracking of the budget versus actual, right? And then they might be sharing the feedback with you and your team members, like how things are being moving, like how much time we have planned for the respective activity and how much time actually we have charged. Right? Have you heard these things on
Yes.
your engagement? Right.
Yes.
Yes,
So
ma'am.
now, like in this CPA journey, like a lot of things which you are experiencing in your journey, practical life, you'll correlate this why these things are happening, and how actually it has to be happen. Both the thing, something which may be happening, which is correct, and you will be able to correlate this theory with your experiences. But something which may not be happening appropriately, then you can go back and recommend to your team member like it has to be like this way, right? So in terms of budgeting, have you studied this budgeting in your college days topic?
Yes.
Hmm. What all type of budgets you have studied? Hmm? Do you remember?
Surplus, deficit,
Sorry.
surplus budget, deficit budget,
Uh-huh. Okay. What else? Have you heard like fixed budget, flexi budget? master budget, capital budget, sales budget, purchase budget. Have you heard these terms?
Yeah, few of them.
So yeah, so we'll be studying all these things, like the flexible budget, fixed budget, or you can say master budget, purchase budget, sales budget, payroll budget, engagement budget. All those things we'll be studying in this budgeting and forecasting. Do you know what is forecasting?
So forecasting is like preparing a budget for future. It is done on the basis of current year financials.
What else? You understand by forecasting?
Estimating the cost sale.
So
We
when
can
you make
forecast on the basis of the market trends which are going on. Like the business, like the environment is dynamic, so we have to change our things accordingly.
Yeah, very true. So, like all the budgetings which you make for the future years, right? For example, like if you need to make next 5 year, you can say budget. So how do you budget for next 5 year financials? Based on certain assumptions, right? Based on the facts which is available currently, right? You'll be applying best of your understanding based on the facts available to you, and accordingly you'll take certain assumptions, and basis those assumptions you'll do the budgeting for next couple of years. So that is called forecasting and projections, right? And there are certain assumptions involved in it, and there are certain information involved in it. So you'll be understanding budgeting, forecasting, and projections in detail, right? So have you heard the profile called FP&A?
Financial planning and analysis.
Yeah, have you guys heard? Saloni, Francie, Arun.
No.
This is one of the premium, you can say, profile for a CPA in the industry called FP&A. Like after this class, how many of you know Naukri.com, timesjob.com, Monsters?
I
Have
know.
you guys?
Yes, yeah.
Sure, each one of you.
Yeah.
Yeah. Or shall I ask for thumbs up to see who all know Naukri.com? Or now LinkedIn job portal also, right? So maybe after this class, go back and check what is FP&A profile. That in this class we'll not only like studying the topics only. That is not whole objective of like studying from person like me. So objective is to get the real experience of the real industrial world, and what all things you can more explore after the CPA, or when you are qualifying certain exams of the CPA. So these are the domains I'll be sharing, keep on sharing with you as we'll move forward. But FP&A is one of the finest domain for the CPA, I would say, and really a high-paying domain in terms of industry. So if you get any profile in FP&A, then nothing like it, because you'll be directly working with the top management of the organization, right? For example, now you are working in EY as a staff, right? Then there would be senior, then assistant manager, then senior manager, then director, and then partner, right? But if you are in FP&A profile, you'll be working directly with the partners, right? Same way, if you see in the industry segment, for example, as a fresher, we joined as a analyst, or maybe as an accountant, or as a maybe like junior auditor, right? So there would be again an hierarchy to reach to the director level people, or you can say partner level people, or you can say managing director or CEO, CFO level people, right? But if you are in FP&A profile, you'll be directly working with them. So that will take your, you can say, career path to the next level in very short time. Make sense?
Yes.
Yes.
Okay, so next is capital structure. You know what is capital structure? How many of you have done BCom honors, Delhi University, by any chance?
Unfortunately, me.
Anyone else?
Yes.
Okay,
Me.
so I'm sure you might be knowing capital structure. It was, like struggling area in third year of your BCom honors.
Yeah, a lot of things. Net present value, cost of capital,
Yeah,
discount factors.
yeah, yeah. So capital structure, like when you think of capital structure, what comes in your mind? What all things will be giving funding or financing to the organization is part of capital structure. So capital structure may include your equity, may include your preference share, may include your debenture, may include your borrowings, right? So I'm hoping you will be knowing what is equity. Yes, no.
Yes.
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 What is preference share?
इक्विटी का छोटा भाई वोटिंग राइट नहीं मिलता
Yeah, yeah. Anyone else would like to give explanation? What is preference share?
Like they are given preference over the like at the time of the payment they are given preference over the debentures and other
Mhm.
borrowings and all.
No.
no no so
No, they're given preference over equity.
hence
Yeah,
payment of
yeah,
dividend
Okay,
but
okay.
it is
Share,
not voting
yeah.
right.
yeah. Rachita, you are saying something.
Yeah, same Kamal, that they are given preference over equity shareholders.
Hmm. Do they have dividend
While
fixed or
dividends
not?
have,
Do they have fixed dividend or not?
uh, no, I don't think, I don't think
Okay,
classes.
I'll take you back to the college days. Somehow we manage college. Now Kamal sir is taking back to the college days. Yeah, no worries. You have to go back. So yeah, preference share. There are two type of preference share. One is you can say convertible preference share, other is non-convertible preference share, and within that also there are two breed. I would say one which have cumulative dividend, right, and another which do not have cumulative dividend, right, but they all have dividend, right. Have you heard about debentures? What is the characteristics of debenture? They are bearing interest, right.
Right.
Hmm. And borrowings is again same like a debenture, but that's called debt or maybe financing from uh, bank or any financial institution, right. So composition of all of them will make your capital structure. But as a CPA, when you are working in an organization, what you need to you can say provide a solution to the management and company how your overall capital cost would be minimized, can be minimized, right. So how much amount of equity you should have, how much amount of debt you should have, how much amount of preference share you have, so that your capital structure is balanced and you have minimum cost of capital, right. So we'll be understanding that also in detail about the capital structure. Hmm? Next topic is investment alternative using financial valuation decision model. I am not sure you have heard this term. Investment alternative. Have you heard this term before?
No, sir.
Hmm?
Yes during graduation only
Mm-hmm.
so
Yeah.
it's like while in this subject we actually studied uh, while deciding investment option like in which instrument we should invest and comparing the cost and benefit analysis of all the instruments.
Yeah. Anyone else would like to add? Hmm? Saloni, Surya, Rachita. You guys would like to add anything? Abhishek, Arya. Are you guys here? We have just started.
Yes.
Yes, yes.
Okay, yeah, investment alternative are like different ways of making investment and what all things you should be considering when you are evaluating the different proposal for the investment, like at how much time you'll get the payback, what is your net present value, what is the economic value, what is the cash flow, what is the discounted cash flow, what is the internal rate of returns you'll be getting out of it, right? So I'm sure in costing, you might have studied this topic in your graduation, but we'll be doing again a reiteration of the same. Right. Next topic is the risk management. Have you heard this term? At least in EY, you might be hearing this time and again. Risk management.
Yes.
Right. What do you understand by risk management?
So basically, while we are performing the walkthroughs of different audit clients, we go through their entire IRPR process, and we identify risk in those process, and then to mitigate those risks, some controls are being placed. So this is
What is the full form of IRPR?
so it's IRPR is initiation, recording, processing, and reporting. So how a transaction is initiated in the accounting system, and then how the system reports it, then how is the transaction process, and finally how it is being recorded in the financial statements.
Yeah, everyone agree? Yes.
Yes, Kamal.
Yes, yeah.
Okay. So in this, Jatin, you went a level ahead. Risk assessment is being done before this, right? So the risk assessment mean identifying the, when we will be discussing in context of company. So when we are discussing in context of company from the management point of view, I need to identify the risk to my business, right? So from the management side, they do risk assessment for their business. So what can go wrong for their business if anything is happening or if anything is not happening? That is called risk assessment from the business standpoint of view. But when it comes to audit side, when we do risk assessment, what we do, we take all their business risk and identify what are my audit risk. There may be possibility there are 1,000 type of business risks, but out of those 1,000, maybe like 600 may not be impacting my audit, right? So I should not be worried about it. So I should be worried about remaining 400 risks which is impacting my audit. So when I say impacting my audit, they are impacting your financial statement or internal controls. Make sense?
Yes.
Right.
Yes.
So now coming to the risk assessment, there's a beautiful topic in this is called COSO. Have you heard about this term?
Yes.
Surya, Arya, Sejal? No?
No.
Okay, just make a note. Today, go back to your audit file and check for COSO framework. This is very important and heavily tested in your exam, both in audit exam as well as in your bar exam. So this topic is in both places, in your audit as well as in bar. Right, we'll be discussing in detail. Just have like around you can say 5 you can say concept and 17 principle in the COSO framework that we'll be discussing in detail when we come to the risk management. Right. Next topic would be economic and market influence on the business. So, like when you do the business, there are so many things which are not in your control, right? So that can be, like change in interest rate. For example, bank has changed interest rate. RBI has changed any interest rate. So that is not in your control. You cannot control that, right? Second is inflation or deflation. That's not in your control. You cannot control this, right? So, for example, change in foreign currency prices. That is also beyond your control, right? Or maybe you can say demand and supply of the product. That is also may not be in your hand, right? So those external factors on which you do not have any control, right? What are those factors? How they influence your businesses and how you need to be careful on mitigating those kind of risks. So that we'll be studying in the economic and market influence on the business. So these all topics were earlier there in BEC. Most of them were in chapter 1, 2, 3, and 5, right? So these all area would be coming from BEC to BAR, right, Jatin?
Yes.
But the chapter 2